mall and do something like carry a wad of cash. But that doesn't make sense. I do carry some change though, because you know what, I respect the fact that the car guard is out there. Right? And me living in my bubble shouldn't be forcing him to live away from me. Right? We need that connection, which we're missing in South Africa to a great extent, between the people in one side of the picture in the Time magazine article and the people on the other side. It's not about the geographic picture, it's about how you create the connections. What are the bridges? What allows one to travel to the other and vice versa? So, that green looks terrible. Right. So who am I? My name is Kumaran Selvaraju. I'm a 53-year-old father. That tells you about my worldview on things and what I deem as important in the world. Politics, geopolitics, business, all of these things are wonderfully great stuff. My 11-year-old daughter comes first. I love conversations. I prefer them to speeches, so if you want to converse with me, let me know. I believe very strongly, and this is through questioning. My dad, interesting man, I'll talk about leadership in a second, very interesting man, told me at a very young age, even though that he was very highly spiritual, religious, believed a whole bunch of things, he told me, question everything. Even the family values, question everything. My daughter's teacher calls me, because, you know, you learn from your father, she calls me and she goes, your daughter questions everything in class. So I believe a primary role of the state and society is to protect the family unit. It might seem simplistic, but it's actually quite profound. Not because I thought of it, but it actually is quite profound. The family unit is past, present, and future. The grandfather, the parents, the child. By protecting the family unit, by nurturing the family unit, you respect the past, you enable the current, and you create a vision, and you create the future. Because none of us sitting in the room, people my age sitting in the room are not going to be around in 10, 15, 20 years' time when ChatGPT becomes something entirely different, right? We're not going to be around. It's going to be our kids, right? That's a different, we've got to enable that future generation, because that's how, and this is what I believe in very strongly, not just financial inclusion. That's like saying everyone should be given a slice of bread. That's a stepping stone to prosperity. And the thesis of what I say is that big numbers matter, enablement of populations matter, enablement of people matter. Because once you do that, you leverage the population. When you leverage the population, you increase the GDP. When you increase the GDP, you increase the basis of earnings for every single company, banks, non-banks, the whole lot. You increase safety, you increase security, social well-being, you increase all of these things, right? So I believe also very strongly in evidence-based, everything should be evidence-based, right? So I don't believe there's a disparity between people on the basis of geography, gender, racial, or other types of biases. I think those are ridiculous, right? That's my personal view. You can tell me you don't believe it. That's my personal view. There's no, and I know this because I asked ChatGPT, right? There's no real evidence that supports the nature argument that because a person is born in Sweden, they are predisposed to be technologically literate. That doesn't exist, right? There's no argument that says if someone is born in Africa, they cannot be an innovator. It all comes down to the nurture piece. And we've seen that. There's evidence that shows that countries that actually enable their populations, and interestingly, Africa is doing this greatly. There's some amazing things happening. So, leadership is very important to me. Throughout my career, I'm mostly in the payments field, but I've been involved in digital. I'm an old programmer, an old useless programmer. I used to program years and years ago. One of my first leaders looked at me, and I constantly argued with the business about the silliness of what they were doing. Right? Like, why are you asking me to write this code? And he kept saying, but your job is not to argue with the business. Your job is to do what the business told you to do. And I said, but that's ridiculous. If the algorithm is bad, then putting technology to speed up the algorithm is just going to make our errors happen faster, right? So eventually, being a leader that he was, he thought about it for a while and he went, Kumaran, I'm taking you out of programming. I'm going to make you the head of business of the product side. So he put me in that environment and I grew up in that area. My wife then went and studied an MBA, and I got very worried with the idea that she was going to be studying and I wasn't, and she was going to be, there's the spousal competition thing, right? And she was going to be more advanced, so I went on the MBA as well. The talk is done in consultation with ChatGPT. It lies a lot, right? It doesn't know it's lying most of the time, but it does lie a lot, right? There's experiments where people have asked it to give a biography on a totally made-up name, and ChatGPT has spat out a biography on someone that does not exist, right? Sometimes it just doesn't know. But it is more trustworthy, simply because it doesn't have a human cognitive or implicit bias. Its biases I can understand. Human biases are much more difficult to understand, right? So with ChatGPT, I can ask the questions, I can figure out its biases, and I can work around that. Human biases are different, if you know the rules. It's incredible at spotting logical fallacies. So one of the interesting things to do with ChatGPT is to take a speech by okay, let's pick on politicians, right? To take a speech from a politician, chuck it into ChatGPT and say, list all the logical fallacies in this argument, and it'll tell you this is a slippery slope, this is a straw man, this is an ad hominem attack. It'll do all of that. Brilliant at that. What is important, though, is not that it is the most advanced, because it is nowhere near the most advanced AI, right? We don't even know what the most advanced AI is. But it is affecting every man's understanding of what artificial intelligence, what natural language processing is. It is changing the rules. Something that was only available in the 70s to a panel of MBAs that sat around the IBM table and made the wrong decision. Something that was only available in the 90s to wealthy people, only available in the 2000s to people who had access. Something that's changing. People are able to actually ask about complex things. What is the CAGR on this investment, right? Why would I want to know that? But I can ask ChatGPT, right? Or the next AI tool. And it's messing up strategies. What are we going to do with our call centers, right? What are we going to do with, what are we going to do with deep faking technology? What are we going to do with all of this stuff? Our competitors now, we invested R1 billion in IT infrastructure, which was supposed to have a payback period of 20 years. Now what we have is, damn it, OpenAI just came out with ChatGPT. Now what do? Let's scan that strategy, let's move to the next strategy. Right? I don't think that's actually a strategy. So falsification of existing beliefs, very important, very useful tool. It pretty much says, if you see something and the rules don't apply, you've got to augment the hypothesis, or you've got to change it entirely. A couple of quotes on the page, and the one from below is from me. We overestimate the change in the next 2 years and underestimate the change in the next 10 years. We are terrible as a species on forecasting and prediction. Terrible, right? There are experiments that are done on this. Animals in the wild are better in their environment at predicting what's going to happen next. We bring in tons of biases, tons of prejudices, tons of holding on to cash cows and legacy thinking that we find incredibly difficult to let go of. And guess what? We're going through this period of acceleration of change itself. That means you've got to keep changing stuff, right? So how do you invest in something? It's no longer a strategy. You now got to invest in adaptability. You've got to invest in failing. What do I do when I fail, right? How do I not overcommit to myself to a payback period as a company of 10, 15, 20 years? It's the difference between Formula One driving and, apologies to any enthusiasts out there, but Formula One, I don't understand it well enough, but what I know is that you go around the track 51 times and the pit stops are at specific positions, right? That's very different from rally car driving, where you have to rely on a navigator and respond very, very quickly, right? You can't plan it in the same way. So, the future is already here, it's not evenly distributed. In fact, it's got huge social, and because it's got social, it's not divorced from economics. Social problems lead to political unrest, which leads to the outcry. And what happens is eventually those periods of outcry happen at shorter and shorter distances because things are happening faster and faster. And that political outcry leads to the changes in policies of governments because governments are there to serve their people. And that change in policy then leads to regulations. And all the companies around the table are all in the same position going, well, the regulations are just getting way too much. There's too many regulations. They just keep stacking up more and more and more. There's GDPR and there's this and there's, POPIA and this and this and this. The cost of the product itself is being compromised because we just want to go out there and innovate, right? We just want to go, like the value proposition of banking. I actually think it's quite solid. Central banking and banks create money in the economy, right? And I haven't been able to falsify this as yet. They create money in the economy. If you enable that to happen without safeguards, then the value of the money in your pocket and your bank account goes down. So you have to have those safeguards, right? That's how money itself needs to retain its value. Is value extraction sustainable? So we look at a model and we say, well, let's say I'm going to go into a country, I'm going to look at the people in that country, I'm going to go, what's their personal disposable income? How many of them can afford a cell phone? How many of them can afford to pay for a cell phone and the subscription fee or the prepaid fee or whatever it is on a monthly basis? Come back and it says 5% of the population, right? Major cellular companies in the world, major mobile companies in the world did exactly this with Africa. They looked at Africa and on a PDI basis said, it's a wasted investment. We're not going to be there. Mo Ibrahim, Celtel looked at it very differently. They said, you're getting economics wrong here. Value is created, it's not just extracted. By creating the cellular network, you are actually going to create innovation, creating industries. And that in turn will create value, and we will be a participant in that value. Right? Very different way of thinking of it. You either can extract from what is there, or you can create value and share a percentage of what the entire economy grows up to. Very powerful stuff. Mo Ibrahim, by the way, and I'm a capitalist. I love good capitalism, not end-state or toxic capitalism. Mo Ibrahim sold his share in the company for $3.4 billion. Right? So it wasn't a bad punt on his part. Similarly, Yunus Mohammed did a similar thing. He looked at Grameen banking and he said, well, there's a mistaken assumption that poor people are bad credit risks. If you bring in education, if you look at things, if you create community environments, you will actually create a sustainable credit and savings model. Right? Grameen banking is a success story. More successful is that it created a savings bank that is a top 10 company in Bangladesh from people, not like South Africa where microlending is thousands and thousands of rand. We're talking $2, $10, $50. They created a $3 billion liabilities book in the Grameen Savings Bank. And that's the last time I looked. So, we tend to conflate. Oh wait, sorry. I heard this from a politician, a minister. Unfortunately, I'm not allowed to reveal who. Right? But it was interesting because the politician said, or the minister said, he started saying we're a nation, and then he stopped himself and he said, no, we're not a nation. We're a country on the way to becoming a nation. It's a very interesting thing, right? Because it asks one, what exactly do you mean by becoming a nation? Right? So what does that mean when we talk about physical and digital society? So something I'll tell you as a techie, as a programmer, I've been programming since the 1980s. As I said, not very good at it, but I do love computers, right? The physical world is nothing like the digital world, and vice versa. If I hand over this to you right now, you've got it, right? I don't have it. Double spend problem. Physical world. Bearer-based physical instrument. Took a hell of a long time and some really complex mathematics and algorithms to figure that out in the digital world. The first program most people get taught to do when they learn programming is hello world, and then you learn how to recurse it, and it prints hello world like a million times on the screen, right? It's a dumb thing, but you can do that on a computer because it can duplicate. You can't do that in the physical world the same way, right? So the physical world and the digital world are not the same. And we keep trying to make the mistake that we can superimpose the digital world, and the transition for everyone is into this digital world, and everything in the physical world just moves across. And I could tell you tons about cash because we've done huge amounts of research that is different to most of the research in the rest of the world when it comes to cash, the idea of cashlessness, and what cash means to a society. So, is technological advancement a viable strategy, the basis of innovation, competitive advantage, and sustainable profits? My mandate at the Banking Association of South Africa is the sustainability of the banking industry, the sustainable business of the banking industry, right? How does banking continue into the future? Not how do profits get made next week, right? The long-term piece. How do banks carry on? What's the model? So if it keeps changing and it's freely available, if everyone has ChatGPT, where's the competitive advantage in ChatGPT? If everyone has an AI, what's the competitive model in having the AI? And I'll argue that that stuff actually comes not from the data analysis and not from all of that stuff. It comes from the questions that are asked and the contribution of the company to society and vice versa. Right. So observations on accelerating change and the demands on various actors. So as I said, physical and digital world, very, very, very different. There's a beautiful painting by the French artist René Magritte. I won't try and say it in French, but it's a picture of a pipe, a smoking pipe, and at the bottom it says, "This is not a pipe." It's a picture of a pipe. It's not a pipe. Very important to see that. Digital world, physical world are very different. In my mind, the digital world is more like let's say South Africa's digital world is more like an overlay across the entire world that allows the rest of the world to plug into what is South Africa. It's not geographic, it doesn't have the limitations of geography, but it also doesn't have the community that is associated to geography. When we talk about things like digital identity, that's great, but I don't like the idea of being a faceless person on the web somewhere. You know, there's thousands of people who know me on LinkedIn, but they don't know me, right? When I sit with my family, they've never seen my ID book. They don't care what my ID book is. My friends have never seen it, but they trust me. They do all of these engagements with me on a different basis entirely. And we might be gaining in connectivity, but losing in community. And that's quite important because society is about families, and that's about community. And we've got to be able to pull all of that together. What's important is economists, the overall assumption, the macroeconomic assumption is that improvements in technology improve productivity. That is true, right? But it's not distributed. And what we've seen in the same period that we've seen the internet boom is we've also seen, and I don't have a working paper on it or anything, but it might be that the rise in inequality, the rise in the digital divide, tracks almost perfectly with the rise in internet tools being made available. So here's the actors. We've got the world, and so big picture, right? We're talking about the whole thing. What's happening in the north, what's happening with the one country and the other country bombing it, and all of these things, right? Big picture. This morning, 41 countries said they're willing to accept a BRICS dollar as a currency. That's a big thing, right? 41 countries. Right? So the world is a unipolar world at the moment. It's largely been unipolar for a long time. It sets clear social and economic rules in the path to nationhood. We know the rules. If you want to be a bank, if you want to be a country, you go to the World Bank, you go to the BIS, you go to Basel, you get this rule set that comes down, you follow the rule set, and you're on your way to becoming a nation. You're on your way to putting banking rules in place, for all of these things in place. That's not necessarily true. And under the sovereigns have varying degrees of power. Right at the top, you have a superpower that is very different to the rest because, like Clem Sunter said in the 1990s, when he was asked, you stacked all the countries, and he said, someone asked, well, what do you do about America? And they go, America's the big gorilla. You do anything it tells you to do, right? That's the one thing. Varying degree of powers under the superpower. Information and technology is centralized and controlled. Now we're getting into this environment where we're going into a multipolar world. It's going to happen. Right? All the indicators are that that is going to happen. We are going to go into a multipolar world, economically, probably politically, probably socially as well. Digital nations will emerge. Right? India, through its Aadhaar system, through its digital identity system, has not just built a payment system. They've enabled a digital identity basis across 1.4 billion people. Just think about what that means, right? 1.4 billion people, all the potential SMMEs, individual content creators, all the people that go and write code. Imagine that on a base of 1.4 billion people. The power of regions and large numbers emerges. I told you in the beginning, I don't believe on bias based on ethnicity and all of those things. But large numbers do change things, because the statistics changes. If you get 1% of the people of a population becoming Nobel laureates, then guess what? 1% of a billion is a lot more than 1% of 60 million. We have the sovereigns, and I haven't called them nations or countries for that very same reason, is that some are not nations at this point. Our policies provide a solid foundation for maintaining and building nations while we preserve sovereign identity. But that's changing. The policymakers are now asked to adapt. They are asked to change. The very frameworks we stand on, policies that are supposed to hold true for 20, 30 years are changing. At the moment, there's 80 papers on CBDC across the world, right? 80 papers. It's ridiculous, right? What's the view? China has a CBDC that is not blockchain based, right? Some countries have gone and accepted it as Bitcoin as a legal tender. We've got this incredible space happening, and we don't have that guidance anymore, right? It's not as easy to listen to the World Bank, copy the framework, take the template, put it down, and then go and, in my case, we'd go to all the banks and say, okay, let's answer the 15 questions and see how we're going to do about it, and do our version of the biryani that the World Bank has asked us to create, right? It's different now. So policies and regulations have to adapt. They have to destabilize foundations, because they're subject to destabilizing foundations and increasing risk. Risk-taking, governments are getting used to risk-taking. That's what innovation means. If you unlock innovation, you have to unlock increased risk. That's fascinating, because South Africa is a conservative financial economy. It helped us really well during the global financial crisis. But we have a lot more tier 2 capital than most banking sectors in the world. We're a lot more conservative than most banking sectors. But now you've got this innovation problem, because you can't solve for the entire thing without bringing new actors into the value chain and asking them to participate. But as soon as they participate, they're going to bring risk into the system. So you're now got to balance risk-taking with stability. Large number groups are necessary. Regulation attempts to fulfill its mandate, but inadvertently adds to costs. Because if it doesn't change the algorithm, if it doesn't change the model, all it's going to do is you're going to get regulations coming out from each regulator, and as you play across the space, as fintechs, as banks, as large techs, as group techs, whatever techs, right? As you play in the space, you're going to go, you know what, I'm affected by this act, I'm affected by that act. Now you're going to have 40 compliance officers, a CEO, a CFO, and a marketing director. That's not a viable business model. So central banks have changed. In the past, central banks didn't get close to people, right? It's a supply side thing. Central banks supply products. They supply money through their agents called banks. Up until the last 10, 15 years, it was ridiculous to even consider the idea that central banks would be getting involved in things like conduct. What's going on in the market, right? Inclusion was like it's a way out in the air kind of thing. It's not structured that way. Central banks are not structured to actually go and talk to communities. But this is happening all over the world, even in America, right? I'll say that tongue in cheek, right? We've gone from supply, in terms of firms, we've gone from supply side power based on information and technology power. We've now seen, and people call it democratization. I think it becomes, it's a little bit too facile to say that. It's more about that accessibility to this power, right? If you have a mobile phone, someone like me can sit in a room with 50 kids smarter than I am. We've got PhDs, doctorates, and all of these things. And only one condition. They're not allowed to switch on their phones. I am. And I will walk them under the table. As dumb as I am. I just have superpowers at that point in time. So the demand base and the regulatory environment is slow moving. It has to start cycling faster. Right? We're seeing this throughout the world. Multi-year strategies and payback on investments, good or bad. And this is investments by government and investments by firms. But buying $1 billion IT system that is fixated on an end state is dangerous. If that system cannot adapt, that investment is out the water by the next change that the Chinese or the Americans Or, you know what, your own fintechs in the country do. Right? Same for policies. Value extraction works as a profit generator, and that keeps it, in the old world, that kept things going. We look at ops losses, and we look at things like this, and we go, okay, let's reduce the ops losses from 5% down to 2%. We're okay, the income statement is fine, I've got my share of the market, and that's good enough, right? Because that it is, it's the restaurant model. I don't need to sell food to everyone in South Africa. I just need to open a restaurant that, at my price point, sells food. I need 500 people in my restaurant every day. I don't need everyone. But that's changing. Buyers are informed, they're forming groups, right? Real groups, social groups, right? I mean, all of you know that if you're looking for a service provider, the easiest thing to do now is go to your community watch and ask, who's had good experience with a plumber in the area, right? It doesn't matter how much advertising, another guy could have spent R1 million on advertising, it doesn't matter, right? When you go to Amazon.com, it blows my mind that they can put customer review on the front page of their website. How strict do your back office processes need to be if you can manage something like one customer with asymmetric power? If I go there and say, my card details were compromised by Amazon, right? I have asymmetric power. I could cause them to lose $100 million tomorrow. Me, right? But they've got these back-end scalable, customer-focused processes that keeps moving and adapting to where the customer is going. Able to turn that around and able to keep their back office processes slick and fast, so they deal with me very, very quickly. So we've gone from, so buyers are informed, they form groups, they exert demand and power simultaneously by increasing local and global competition. We're seeing this, right? You know, we see either scared or wanting to get employed by, or wanting to be bought by, or wanting to form a partnership with Google, Apple, Facebook, and the like. Alipay, WeChat, and the like. Right? It's no longer about sovereign strategies. It's more about how do we don't miss the FOMO of being part of the globalized thing. Right? And that's a bit scary, because the power is not sitting with the companies anymore. It's not the supply side power that says, like in banking, we generate products and we expect people to adopt them. But now you have this other thing coming about where customers go, well, I want the product to look slightly different, and I'm going to form this little caucus group. And then a fintech listens in on this and they go, so you like the product to look like this, which is not of interest to a large bank or anything like this, because the group is tiny. Now you get 1 million of them that have groups of 5 each. And now you've got 5 million customers outside of the ecosystem doing something entirely different. So, the last piece, I've now mentioned it, families do not have the same opportunities, but have similar visions. So all of you around the table, you might not have kids, but you are children of someone. You had the opportunities of your parents sending you to school, putting food on the table, transporting you, doing all of these things. Those visions don't change, depending on where you sit on the socioeconomic scale. This is something that everyone wants to do. I spoke about leadership earlier, and one of the most exciting things for me is the leadership lessons I've learned. When I joined the Banking Association, I'm a digital person, I love digital stuff. My boss at the time, Cascovalio, was like, I had to go away for a while. I came back and he said, Kumaran, you're in charge of cash. And I said, I've avoided it for 20 years. Which is something, it's a great thing if you're a payments person to avoid cash. And he puts me in cash. Learned incredible amounts. When COVID came, he said to me, you're going to do your job right or people die. Powerful thing. I then met my next boss and I was a bit worried because it was a new boss and everything. And she said, Kumaran, what do you know about the Freedom Charter? I was a bit weirded by this, right? Why are you asking me about the Freedom Charter? Ask me about ISO 222, ask me about APIs. I can tell you lots of stuff about that. And then I went and read about it. 1955, 3,000 people on the back of about 100,000 inputs get together and write a piece of thinking, of human rights doctrine, that is regarded as one of the finest pieces of writing in the world today. 1955, under threat of prosecution, geographic constraints, they managed to do this. Today, we have email, the cops are not chasing us down the street, and yet we are focusing on mundane things. We don't have visions, we don't have big dreams and things. How is it those people could do that? We don't do it today. So, Am I running out of time? Oh, okay. Got 1 minute. I might take 2. So there are dangerous assumptions holding us back, right? We make very, very silly assumptions. As I said, evidence is important. Technological adoption is a barrier to inclusion. Nonsense. Absolute nonsense. Show me a Facebook manual, show me a WhatsApp manual. That's nonsense. It's an excuse for not putting the technologies and the things out there. It is not a literacy problem. Value extraction is sustainable. No, Mo Ibrahim proved that's not true. Informal markets will wait for the formal sector and regulators. No. My mother couldn't wait for someone to give her a loan to put her children through school. She worked. She did what she needed to do. The taxi industry, which we might have horrible things to say about, responds to a demand. The informal market is irrational, nonsensical. People are not irrational. They don't throw away their money or expose themselves to crime unnecessarily. They act rationally. In fact, much more prudently than I act when I walk into the Mall of Africa. The Grameen Bank, low-income borrowers are bad credit risks. Nonsense. Any single entity can solve for 100% of a nation's problems. Cannot happen. It's a diminishing return curve. So I'm going to speed up very quickly to the last slide. Ooh. Last 2 slides. So, we are seeing leaders emerge, right? And it's important to ask, what are these countries doing? Some countries, like Sweden, have been doing it for a long time. They've had national vision for a long time. So even though they're small, for 100 years plus, they've had tax, policy reforms, everything that has been structured around their nationhood. But we're seeing other countries, India and China, very different models, but they are leveraging their population bases. So where does this take us? And I've got to rush now. So you'll see my model. Value creation, inclusion, prosperity. I think inclusion is simply a stepping stone to prosperity. Prosperity is the thing that needs to happen, and that should be written into the doctrines. So, it was an interesting slide, but I won't do it. So where are we? 1 billion people, minimal legacy infrastructure, that means it's not tied into the cash cows, decentralized markets, innovation based on demand, a young demographic, and a passion to rise. Now, we would be absolutely naive and dumb as South Africa to think that a population of 60 million, without integrating and harnessing and being part of the African continent, which has 1.3 billion people, that's what we need to stand up against the power of China, the United States, India, all of these things. Big numbers. Thank you.